Hi, this video is to discuss about the importance and current issues pertaining to insurance and retirement planning. These two elements should be considered when developing a financial plan. In this video, we will cover two interesting topics, which are insurance planning and retirement planning, based on the data and evidence that we have collected. It's also a valuable knowledge that we will experience sooner or later. Please enjoy this video.
Insurance planning. Life is full with uncertainties, life is full with risks. However, we can always analyze and forecast risks that might happen, such as death, critical illness, and unfortunate events such as loss of assets. It is important to have a comprehensive financial planning in order to achieve financial goals. Insurance can be used as a tool to prepare yourself from chronic illness and loss of income. At the same time, insurance used to protect family and loved ones, your home, your assets, or your business against unexpected events. The idea behind insurance is to get a group to contribute financially to a fund specifically designed to help individuals recover in the case of an expected loss. People who contribute in insurance is known as policyholder. It is a contract represented by a policy in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. The company pools clients' risks to make payments more affordable for the insured. It is beneficial to anyone looking for protection to all of their assets. Insurance is important as it helps to identify and analyze risk factors in life, therefore helps to seek proper coverage. This proper coverage actually helps the policyholder to focusing on building their wealth and their savings, therefore attaining a peace of mind if disaster strikes.
Importance of insurance planning: paying medical crisis illness and hospitalization, maintaining living quality, child future education, include saving and investing options, cover financial loss and protect house. Tropical climate and presence of two monsoon seasons and floods have become worse in recent years because of global climate change, as evidenced by the tremendous flood tragedy that affected both urban and rural regions early this year. Because of the amount of development going on in Kuala Lumpur, it's becoming worse. With our country's erratic weather and frequent flooding, Malaysia motorists would demand flood coverage as part of their auto insurance. Malaysia has impacted many people across the country. The flood risk is expected to persist during this monsoon season, which is extremely concerning given that many Malaysians are still uninsured against flooding. According to Insurance Service Malaysia statistic, only 4% of motor comprehensive policies and 30% of fire material damage policies have flood coverage for 2021.
Now, let's talk about the other insurance coverage. Many vehicles owners are still not aware of the importance of special perils coverage. Let's take a look on this example. This is Anna. She is 24 years old. She never had a thought of taking the special perils coverage for her car and doesn't know by not having special perils coverage, it can be a future burden to her when there is a natural disaster happens. If her vehicles are affected by natural disasters, she cannot make any insurance claim and therefore she might be spending her own money to repair the damages. Therefore, it is important for you to prepare yourself by getting special perils coverage to avoid any loss in natural disasters.
A consumer activist has called for insurance companies to offer 50% rebates on repair costs of vehicles affected by the recent floods. Federation of Malaysian Consumers Association's president Marimutu Nadasan told FMT that this rebate could be considered as one of insurance companies' corporate social responsibility projects. He said many vehicles have been found to be uninsured for natural disasters like floods, adding that up to 95% of vehicle owners won't receive any compensation for repair costs. Insurance companies should look into such cases as long as they are insured with them, he said. Marimutu highlighted several reasons why vehicle owners had overlooked insuring their cars against natural disasters. Firstly, the majority of Malaysians are not aware that insurance policies offer optional cover for natural disasters like flooding. Secondly, insurance companies have failed to advise vehicle buyers about this coverage before they purchase their policies. Lastly, floods are becoming more rampant and Malaysians, more specifically from Selangor, have underestimated their severity. Marimutu said FOMCA intended to send a letter to Bank Negara and the government to intervene by getting insurance companies to communicate such policies on natural disasters to the public. Previously, the General Insurance Association of Malaysia and the Malaysian Takaful Association had advised those affected by the floods to contact their respective agents for further advice and clarification if they were planning to make any claims.
Retirement planning, current issues of EPF withdrawal. Year 2020 has brought a huge surprise when coronavirus disease COVID-19 hits everyone across the globe. Some sectors such as tourism, transportation and real estate were badly affected, while some other industries struggled to adapt to new norms. Workers were pushed to work from home as well as students need to attend online classes. Meanwhile, those unlucky workers who lost their job had experienced hardships and difficulties to keep on living and sustain. Therefore, the Malaysian government has allowed special withdrawals from EPF in order to lighten the burden on citizens. According to EPF, the monthly withdrawals frequency is designed to supplement the monthly source of income to help members meet the monthly basic financial needs. EPF reminds members to consider the long-term income security and only withdraw the savings if it is absolutely necessary.
The government has agreed to allow contributors to withdraw from their employees' provident fund (EPF). Prime Minister Datuk Seri Ismail Sabri Yaakob, in a special press conference today, said the amount is set at 10,000 ringgit. He said details on the withdrawal will be announced by the Finance Ministry and EPF.
The series of withdrawals has exhausted members' retirement savings, which actually caused a huge debates among Malaysians and also financial experts. There are suggestions of raising the retirement age. Previously, the compulsory age in Malaysia has been raised to 60 from 55 in July 2015. The raising of the retirement age will not solve the issues as it all started with poor financial planning and EPF members' behavior in facing pandemics and personal financial crises. Let's see on the basic savings. Basic savings is to ensure that members have sufficient savings as at a minimum amount of 1,000 ringgit per month when they retire in order to support the basic retirement needs for 20 years from age 55 to 75, in line with Malaysians' life expectancy. Therefore, members who choose for early withdrawal might not achieve basic savings and lead to insufficiency of retirement fund. In Malaysia, retirement savings is mainly managed by Employees Provident Fund (EPF), which is a federal statutory body supervised by Ministry of Finance. EPF is governed by Employees Provident Fund Act 1991. For government servants who choose pension scheme, this pension is managed by Kumpulan Wang Awam Persaraan Kuap. In addition, Government of Malaysia has introduced Private Retirement Scheme PRS under Private Pension Administrator Malaysia PPA as additional retirement funds for Malaysia. Retirement is the golden age of people's lifetime when they finally decided to leave the jobs permanently. The current compulsory age of retirement in Malaysia is 60 years old. However, people can choose optional retirement as early as 40 years old for workers in government sectors who meet the criteria, or 55 years old for workers in the private sector. According to Minimum Retirement Age Act 2012, Section 4, an employee may retire upon attaining the age of optional retirement as agreed in the contract of service or collective agreement. Future is full of mystery. People's ability to see and forecast the future is limited to the knowledge and experiences. Thus, it is important to do early retirement planning to seize up all the opportunities available to grow our retirement fund. Planning for retirement is essential as retirees and pensioners can only live long during retirement. Based on statistics by the Department of Statistics Malaysia official portal, the average life expectancy in Malaysia in 2021 is around 72.8 years for men, while for females is 78.2 years. Compared to a few years back when people have a shorter period of life, now retirees have to prepare more retirement funds in order to retire comfortably. In addition, the inflation rate is increasing, causing retirement funds to lose their value over time. Let's take an example of 1 million ringgit cash and impact of inflation on it. Assuming that inflation is at 3% rate, those 1 million ringgit will lose their value to 744,000 ringgit in 10 years. In another 10 years, this amount will lose its values to 554,000 ringgit. Inflation is a thief. Therefore, it is very crucial to have proper retirement planning as early as possible.
Important and statistic of retirement planning. Important of retirement planning is the retiree can normally live long during retirement. They also can cover the cost of living and medical costs. It also can guarantee that retiree will rely on the others for their financial need when they stop working. Lastly, they can assist us in achieve our desired retirement life. Statistic of retirement. According to EPF, saving in retirement fund has reduced because special pandemic withdrawal was allowed. However, when the member exhaust all of their saving later, they will fall into more serious financial misery. An effective retirement plan purpose to ensure that people will have financial resources to sustain or improve lifestyle throughout the retirement year. Retirement fund for older population have become a shortfall due because the EPF withdrawal. EPF withdrawal also affect retirement in the future prior to ILS and ICNA introduced by the government. Give to can increase the cash flow.
Based on the recent survey by the AKPK, 50% of Malaysians were not financially ready for their retirement. Following is the difference in retirement planning by age. This is Puan Siti and Encik Zamani. As we can see, there is a huge difference of returns when they start at the early age. On the other hand, you can also apply the rule of 72 to estimate the number of years required to expect the return. it is recommended to not only depend on the comprehensive protection. However, we also need to be realistic by looking at our financial capability too. The same goes for retirement planning. It is suggested to start early because the earlier you start, the more you can get the return in the future.